All right. So where we at? Where we at? Where we at? Okay, so I'm gonna try to talk about how to set your charts up, and we'll look at a couple things. Just to, if you're trying to frame out your trading day, if you're going to trade intraday, when you come in the morning, whatever time you come in, I come in about 7 a.m. Eastern time. And basically I'm drawing out, I want to see what Globex did. So you can see I have this chart over here. Okay. And this basically gives me just a broad eye brush of what happened overnight. And I just want an idea so you can see here. This is only for the previous trading day. I don't go back further than that. I mean, you can scrunch up and look. It's not that important to me, really. I'll get a big picture, basically, like, this was New York Friday. And here we came all the way out. This was the end of the day. This was Sunday, and here's today. So the main important thing to me is that you see we've retraced all of this move here. Look at the time frame here. This is from 8 o'clock, 8 to 9. Okay, and then this is the action from the market open where we're at now. And so going back over to our tick chart, I actually like that color better. I need to switch that back. Hold on here. See, this thing's messing me up. So going back over, we frame out our previous day's levels, and I'm looking at the pre-market high, low, and mid price. Okay, and this gives us the structure. And so from that, when we get to the open, you want to see how price is reacting to the previous. All right, and then what we're trying to do is we're trying to draw our opening range and our initial balance. Initial balance is the first hour of trade, so that would be from 9:30 to 10:30. Okay, so it's still forming itself here. Right now, we're in the middle of the IB. The opening range for me is here. A lot of times what I'll do is I will take a drawing tool and just measure about half of the OR. And look at that. Do you see that? I use the 15-minute. So above this, we're leaning bullish. Below it, we're leaning bearish. With these magnets ahead of us. Now remember what I've said about the problem of having a magnet that hadn't completed yet is that it's a moving target, i.e. the initial balance. So we cannot use this initial balance line here as a line in the sand because it hasn't completed yet. It needs to go out to 10:30. But we can use the pre-market high. Is that the previous day's high? I believe that's the previous day's high. So these act as magnets of trying when you're taking trades. And so if you get an upward bias here, this generally will pull price up into these levels. But you just can't buy it. You just can't buy it willy-nilly. You need some kind of action to lean on to do so. Okay? And so for me, here was the first trade I took, was right here. Why? Because we had a high that leaned against the previous day's high, came off, and we had a lower high.
Pricing in this year.
And that's where I went short right there. My target, as I talk about, is where we came out of. You can see this area here. So this would have been my first target.
Yes, because you may be responsible for some of that move. He sees the S&P test.
And you can see we got it.
At its 200-week moving average.
So then when you come back up, remember when we get these little wicks, we mark these things out. So you have this section and this section.
You know, your piece from this morning,
all right. And you can see we push up, solid bar, and the next bar we come back in. So my second trade was at the close of this bar here. Tried to get into the tail here. I think I got in about right here. So my second trade was about right there, I think it was. And where am I targeting? Down here. These wicks. These wicks. And so if you draw these things out, you know, like we talk about, see, I was trying to get that pop, and I'm late. This is why you can't trade and talk. Let me get below that one. Anyway, so this is the structure. Came up high, pull back, came up, engulfed this, rolled over. And that was the two trades that I took, and it gave me enough profit to be done for the day and switch over to SIM. Okay, and all these lines and levels, you know, are made by the market. We're just following price. We're following price, and we're trying to be cognizant of the lower highs and higher lows. See, we should take this out right here, because we have this over here. So see if we can push up, and there we go. It's kind of hard to trade and talk. But the point being is that anytime you come and sit down at the markets, see, and there we go. Anytime you come in and sit down in front of a chart, the first thing you need to do is get a picture of what's going on. And don't make it complicated. You know, a good place to start is the Globex to today. And just see, you know, where we're at. And if you can't discern anything from that, then you can go out a little further and take a look. But this is where you need to concentrate the majority of your analysis if you're intraday trading. Because it is the most current and pertinent information for you to trade off of. And remember what I said, see, when these lines are static, They haven't completed themselves yet. And they can always push up higher, which is what this is doing. It's trying to create the initial balance high. And now we're at the opening range high, which was the first 15 minutes. You can see right there, 99.45. So now we're caught between these two areas here. But this is not static yet until we get to 10:30. So you cannot lean against that and try to short it because it can keep moving up. This is the line that you can, but how do you want to do that? You want to draw a trend channel here.
Your point of earnings.
You want to draw a, get my thing right. You want to draw a trend channel here, okay? See how price trades within this channel. And if it breaks.
All right, so let's talk about this trade. Let's see. I got in at, if I can find my box here. Okay. Well, let's talk about that first trade, actually. I got in, well, I saw the price coming through here, and then around 6:30. So here's the open was right here. This was me waking up, getting ready for the day, my wife doing her thing, my kid doing his thing, and so I was really worried about it being distractive and missing the opening drive. And I kind of did miss the open drive, but instead of chasing it, which, it just took off right here, I waited for it to pull back. Now, I could have totally been wrong and it not pull back at all, because if you look at the chart from what was that? That was probably about 3 trading days ago. It just basically went up in a straight line, and then after that just went sideways. So I thought, you know what? It's worth missing because I don't want to lose any money. Well, my first trade, of course, was a loss. I got in right about here, I believe, and that bad boy just went floop. Actually, no, I don't think I got in that early. I think I got in even later than that. I think I got in right around this area, and then it dipped below, or maybe I got in here and then it dipped below. I didn't have any I didn't have any affinity to taking a full stop. So I took a, what was that? 3, 4, I took a 6 tick stop and just got out. I flattened. I'm like, okay, if this isn't going to go in my direction right away, because I am using a lot of leverage on my account, then I need to just call it. And that's exactly what I did. And I waited for something else, because if you look at some of these moves, it'll go 10 points. It'll just rip your face off. But if you trade in a surgical manner, if you get in here, then it can just do this. Or if you get in here and it does this, then you're probably not in the right place. I want it to do this right after I get in, or very soon after I get in, or at the very least, I don't want it to get more than 3 ticks against me. So if I get in here, I want it to go, and that's exactly what this one did. So if you were watching the video, you'll notice I got in, let's see, where did I get in? I got in at 84.25. So where's 84.25? 84.25. There we go. So I got in right around here, where my cursor is. So let me mark that. I got in right around here, 84.25. Now, as you can see here, it did go against me more than I would like, but at that time, I was so convicted that I thought, this is exactly what I'm looking for. You've got this beautiful uptrend that's happening, and yes, I got in right here, but it's towards the end of it. It's made a low, made a higher low, higher low, higher low, and when I saw it drop down super hard here, I thought, oh snap, I need to flatten because I've already had this profit, now it's going away. But as it grinded back up, I was very, very highly convicted, and I took my hands away from the keyboard. And as it goes, it went, let's see, 84 to 37.50. So that's going to be a little 16.25. So it went up 16.25 points. That is a monster trade. Enough that, you know what, I'm probably going to either go back to bed or just chill out or go get some work done, because making this much in a single day is almost twice what my stop is. My stop is 2,500, and I should be really happy about that. I mean, that's more than 10% of my account. So while I think there might be some other opportunities, unless I want to come out of retirement for the day and take a trade, to lose this would really upset me, and my mental capital is so much more important than anything else when I've got this much money on the line that I've made for the day, that it just doesn't make any sense for me to do anything but just say, hey, it was a good day. Let's wait for the next time. So as you can see, so let's just recap this trade real quick. 84, 25, higher low, higher low, higher low, higher low, and then fake out, probably grabbing some more liquidity because it was grinding out so hard. And then finally, it really went up. And my stop was 37 even because I figure it's a whole number. It's likely to shoot for that. And if it comes off, it'll probably come off here first. Now, this will probably still go to 37. 21, 37, 16, 37, 33. Those are the kind of levels I'm looking at. But it might be pretty choppy through here. And what I've really noticed is I do most of my best trading in the beginning of the day, and then right after an open drive, if it pulls back, I can usually catch something else. And the reason I expected an open drive was because it opened pretty far outside. I mean, the market was already up 50, 60 points before it even opened. That told me that it could really take off, which if I expect it to really take off, it probably will hold most of its gains and it will probably pull back, but then take off again. And that's exactly what it did. So that's what gave me the conviction. And that's what gave me the conviction also to leave, which is, hey, I made a lot of money. I don't want to lose it. That would ruin my mental capital for the week. And that's the most important thing that I have.